in the latter half of the year. Peter, stick around. We want you to join in for our year-end panel discussion.
But let's bring in also Scott Martin, Todd Schoenberger, Nancy Skinner, and Neil Lipschutz. So I hope you all have been listening closely to Marshall and Peter. Neil, what do you say?
Yeah, I mean, Marshall, obviously very smart man, very experienced man. I think the one thing in 2010 that'll be very interesting, the first hints that we've seen that the Federal Reserve might have to raise interest rates a little bit more quickly than people assumed have had a knee-jerk negative reaction to the stock market. But if thought through a little more, we're at emergency level zero rates, and we're only talking about getting to a still easy monetary policy, even if they went up to 1 or 2% over the year, and we probably won't even go that high. So the idea that the stock market has to be thrown off kilter by any even minimal increase, I think is misguided.
That's a great point, but Scott, sometimes I think the Fed thinks it's bigger than its own britches, and in one case, in terms of controlling interest rates, sometimes market forces have a momentum of their own that overwhelm even the attempts at the Fed or the Fed working in tandem with the Treasury to keep rates low.
Yeah, David, our Fed bigger than its own bridges. That's interesting, huh? It certainly is. And right, David, I mean, look at the long end of the curve. It's leading the Fed, and the market really leads the Fed on interest rate policy is what goes on. And so you're right. I mean, interest rates going up is going to be somewhat of an interesting, I guess, conundrum for the market. But I look at interest rates doing a couple good things. And one thing that it's going to do, it's going to help support the dollar. And number two, it's going to signify that the economy is getting better. So the fact that, the rates are a couple 100 basis points higher in 6 months, I don't think is too big of a deal.
Well, Todd, that certainly would be good for savers, because savers, the people who were responsible and didn't over leverage and buy too much house or too many cars, they're the ones who've gotten the short end of the stick during all of this.
That's right. Well, it's great for savers, but it's bad for the people that have to go out and get loans, though. And a couple of things here, and Neil hit the nail on the head. I don't think the markets are going to react in a tremendous 12-month period just looking at interest rates right now. There is a typical knee-jerk reaction based on what the Fed does, but bottom line is I think the markets, as well as analysts and investors, they're just going to be concentrating on those top-line revenue numbers going forward, and those fourth-quarter earnings start next week or 2 weeks from now.
Nancy, let's talk about politics a little bit, because clearly the president is watching what the market does. They do react. The market does react to indications about tax hikes one way or the other. Are we going to see any more tax hikes beyond the sunsetting of the Bush tax rate cuts?
Well, before I jump into that, I just got to comment on something Marshall said about government intervention in politics. And he said that we never imagined we'd have a Bear Stearns situation, and we don't want the government to get involved. I mean, that's exactly contradictory, because the idea is now we know that there were all these exotic instruments out there trading. Nobody had any idea. There weren't exchanges for them. So I think in 2010, what we are going to see, and we must see, is that we fix these problems. We just don't step in and bail them out and then let them go back and do it. I think you're going to see someone trying to reignite the Glass-Steagall Act, put the firewalls up back again, that you're going to have some resolution authority to regulate non-bank institutions. All of that stuff has to be fixed so that it will never happen again. You just don't throw money at the problem and let everybody go back to, the party.
You don't want to touch the tax question, Nancy.
Touch that question, Nancy.
No, well, I think that the idea that you let the estate tax expire is ridiculous. It's got to be reauthorized. Deficits do matter, and we're talking about people with $3.5 million estates who are getting taxed, okay? So that when we're talking about everyone's so upset about inflation, and it's nonsense to say that this estate tax should completely expire and it not be reauthorized. It will be.
They'll just make it retroactive.
Yeah.
Peter, go ahead. Have a last word.
Peter, final word.
I'll tell you what, if you don't think that we're getting tax increases, I would say look at any of the three major initiatives in the House right now. Whether it's re-regulation of the financial service industry, that's a tax on savers, spenders, everybody. The cap and trade, if that goes through, you're going to see it at the pump the very next day. Healthcare, there's the mother of all taxes right there. So I'd say,
Hang
hang on
to
your
wallet
wallet because everybody's
It's New
chasing
Year's.
it.
It's not Halloween, okay? Stop scaring everybody.
Let's hope they remember that in the White House. Okay, thank you, gang. Here's a look at what's still ahead today on Bulls and Bears.
A new year,